I want to thank everyone for joining us today on the TradeXchange Week Ahead webinar. Sorry about last week. We were not around to do one. And I know a lot of people were confused if we're doing one today, but yes, we are. We'll be recording it and posting it in the news desk later today. So just a quick recap of last week. Markets ended the week down about 3 to 4% across the board. The S&P 500 had its worst week in 5, and the small cap names had their worst week since September. Traders are now sending mixed signals in regards to inflation. It all began when the CPI report came in colder than the expected at 7.7%. Traders across the board believed inflation has peaked and started to come down. What we saw next and added a little confusion and a few different thoughts in regards to inflation was the employment report. Still very strong. And the wage inflation on the employment side came in hotter than expected. Then we had the PPI final data. That was hot across the board. So the question came down to, what do you believe? The CPI data, employment data, PPI data? We have another reading coming up this week on the CPI side on Tuesday, followed by the FOMC announcement on Wednesday. Overseas, China stocks continued their run higher 5 weeks in a row as more and more headlines came out for a shift to their COVID-1 policy. Oil fell over 10%, with oil now trading lower than the start of the Ukraine-Russia crisis. With inflation and many eyes for its peak and slow eases, on the agenda is recession. As more and more organizations and economists believe we are set for a world recession in 2023. We heard from many of the top banks this week that believe a recession is coming, yet no one knows how bad it could be. Goldman Sachs CEO warned about jobs and pay cuts and said to see some bumpy times ahead. JP Morgan's Diamond says we may have a mild to a hard recession in 2023. We all know Wall Street hates uncertainty, and that is what we are getting now in regards to the recession mindset as well as inflation. Members, this week we have the CPI report on Tuesday. We are expecting a report of 7.3%, a drop from previous report of 7.7%. We also have the FOMC announcement and the Fed chair presser on Wednesday. Everyone is waiting for a full confirmation of that Fed pivot. What will happen? Will the CPI continue to come in colder than the expected number? Will Wall Street's uncertainty change? All that could change this week as we have some very important headlines hitting early in the week that could dictate the rest of the trading for 2022. Once again, the expected rate rise for now is 50 basis points. Taking a peek ahead now, looking at your week ahead for the December 12th week. Starting off with your upcoming U.S. and world events. Top earnings, we do have a couple. We have Lennar, LEN, Oracle, ORCL still on the agenda for earnings. Coming up for this week, world events and U.S. On Monday, we have for Japan, we have their PPI. Tuesday, we have that CPI and the FOMC meeting does begin. Wednesday, FOMC announcement and the Fed chair press conference. We also have some international headlines with the UK CPI and PPI and the China industrial production and retail sales. Thursday, quite a busy day on the economic side. We have retail sales for the US and industrial production. Over in Europe, we have the ECB announcement and the ECB Lagarde's press conference. Friday, members, keep in mind, it is triple widget. Company events for the week, as always, your top shareholder meetings with top analyst calls. Keep in mind, members, this list is a brief breakdown of some of the top names. As always, during conferences, you have a list of additional names reporting. As we always mention, if you want any clarification on those lists, you can always reach out to us via Ask the Desk. These are your top conferences for the week. Coming up, your U.S. economic calendar. Monday, pretty dull a day on Monday on the economic side. Tuesday, FOMC meeting begins, and we have your CPI data. One of the key data points on the economic side moving forward. Wednesday, we have your FOMC announcement, followed by your Fed chair press conference. Thursday, we do have a little run of economic data. We have your Philly Fed Manufacturing Index, jobless claims, retail sales, industrial production, and you have on the nat gas side your EIA nat gas report. And as always, members, on Wednesday we do have your petroleum report, which comes out every Wednesday on the crude oil side. Friday, PMI composite flies. Moving forward, your top international economic calendar. We have a list of all the some of the European and China and Japan headline economic data points that are expected for the week. Earnings for the week, as we all can see, not much on the both side. We have Oracle on Monday after hours and Lennar as well, LEN Wednesday after hours. Your fear and greed index on the neutral mindset. So the question comes down to, what will we see next week with the CPI data and the FOMC announcement? Your weekly sector performance, red across the board, members, with energy taking the brunt of the hit this week. We did see according to this chart, not really strong, but didn't really get hit that much, where the utilities at the bottom of the list. Industry comparison, as we always do, compared to COVID. You have COVID drop right here. We did see that bottoming look of a possible formation here, but we do see a little downtick following the recent weakness we've been seeing in markets. Your 10-year Treasury constant maturity continuing to hit new lows. This chart goes back to 2018. Target rate probabilities, as we mentioned, we are expecting a 50 basis point hike, currently around 78% on that side. Your 10-year, 2-year is at negative spot 76. Your AAII investor sentiment survey, basically what it was from last week. We had a little small uptick on the bullish mindset, but we also did see a little uptick on the bearish mindset as well. Year-to-date returns, nat gas continuing to stay up top, up 69% year-to-date. The VIX took a jump as well with the recent weakness, up 32%. Heating oil down about 15-16% the past week, but still up 20% year-to-date. The one interesting one, as we mentioned, was crude oil. Down 4.8% now year-to-date on crude oil. That was green all year long, basically. So we are seeing an interesting shift on the energy mindset, with crude oil down 4.8% from a previous up about 7%. Sector outlook, as always, energy still is the strongest, but what a downtick from the previous week. Not only up 50%, well, only up, but now up 50% year to date from a previous up 62%. All the rest still red on the year, with communication services the biggest hit, down 38%. Your IPO lockup expirations, your expected IPOs, and your FDA calendar. Now some charts. So we'll start off with gold. No changes to the chart, members. Just look at this. Tested to the upside, tested the trend line, and ended continuing on this uptrend. It's a deja vu chart. It basically is the same exact thing that we mentioned last week. We're watching this upside move with the uptrend on gold. SPY daily. No changes to the chart. The uptrend from early October lows was finally broken this week, and we did see some weakness. All that matters, though, in our opinion, is the CPI and the FOMC announcement. This could change dramatically. So we are watching the support levels here with the upside at 400. So the 390 support to the downside with an upside move above the 400 level. NASDAQ daily, no changes to the chart. Last week, you mentioned that we are watching two ranges on the NASDAQ. Another deja vu moment. The borrowed range of 10,005 to 11,500, and we focus closely on the 11,000 to 11,500 short-term range. We tested 11,000, and we also tested 11,500. We closed, though, right by the 11,000 support level. So we are watching this very closely in regards to a move that could see the 10,500 test. But we are watching this week, as we said, it's all about Tuesday and Wednesday. SPY daily on a moving average look, as well as your triple Q daily on a moving average look. We have your IWM daily on the moving average look, which we're starting to see some curling to the downside, but we're going to keep a close eye on this one. 10-year yield daily with your 10-year yield on a weekly look. We added a short-term downtrend since we did have 1, 2, 3, 4, 5 weeks in a row to the downside. So we're adding a short-term downtrend. We are watching for any indication following the CPI and FOMC report to dictate a move above the downtrend or a clear look below this 3.5% on your 10-year yield. Diamond daily with a moving average look, which we are seeing some sort of a curl lower, but as we mentioned, members, this could all change going into your CPI and FOMC announcement. Your IWM daily, no changes to the chart. We did see that uptrend break with that weakness, as well as that support break on that weakness as well. So we are watching very closely for any move or indication on your IWMs. HYG daily with a moving average look, and your S&P 500 on a weekly basis. No changes to the chart. The downtrend from October of last year is still in play, so we are still watching that. The uptrend from mid-October was taken out this week and ended by the lows at 39.34. Trend lines and volumes continue to be key. 4,000 to the upside and 3,900 on the downside support. Your VIX weekly, we saw a test of support levels and a bounce. So we are watching, as we've been saying for a while, that 20 level support level is key on your volatility VIX index. Oil, we extended the downtrend from November because we are hitting new lows. We hit that 70 support level almost to a T. 71.59 ended the week. We are watching 70s on the downside, short-term upside above the 75s, but keeping a close eye on these downtrends for any indication of an upward move. US dollar daily, no change to the chart. 106 to the upside, 104 is key to the downside. Those are what we said last week. This week, what did we see? A high of 105.82, right around that 106 resistance, and a low of 104.11, right around that 104 support. So we are watching those levels very closely for any indication move in the markets. As we believe, we've been saying it for some time, US dollar is a very important factor in the direction of the indices. So we are watching this very closely. Bitcoin, I don't even know if there's much to say. We're slowly getting to the point of taking Bitcoin off of this list, but for now, we're still watching these levels, 15,000 support, 17.5 on the upside resistance. And your SMH daily, building a pattern of around your moving averages, which we are keeping a very, very close watch on. So members, we want to thank everyone for joining us on this webinar. There's not much to say, but it's all about the CPI and your FOMC announcement coming up this week. We'll open it up to a few questions. We do have a few questions, as always, that came in via email regarding our thought process. Members, this week, it's all about Tuesday and Wednesday. Tomorrow, we could see a little movement going into those two data points, but right now, it seems to be all about inflation and what direction the Fed will do. So stay close to your computers on Tuesday at 8:30 a.m. for the CPI report. Stay close to your computers, very close, on Wednesday afternoon at 2 p.m. with the announcement and 2:30 p.m. with the Fed chair presser. When it comes to this, we believe that these two indicators will dictate the next directional move in the markets. And that's why we're keeping a very close eye and ear to what is said, to what is released, and to what the traders and economists believe the next step will be going into 2023. We had a few questions in regards to our thought process on inflation. When it comes to inflation, members, we have the same thought. We believe that inflation is being, the thought on the sticky side. Yes, we believe it is. We speak to people in the local area of Connecticut and New York all the time. And when it comes to the most important aspect of inflation on the energy utilities with gas and electricity, and on the food side, we continue to see commentary from business owners that completely state to us, if people are willing to pay these prices, why would they drop? So that's the mindset of what we're seeing when it comes to certain areas of inflation. On the home side, clearly there is a drop on demand. So we are seeing that affect prices on the CPI side. But when it comes to the everyday US citizen and when it comes to their daily expenditures, the mindset from what we are hearing is that the people are saying, why drop prices when people are paying this price? And you see it across the board. We see it around the area. So that is something that we're keeping a close eye on. When we start to see that, we believe when Main Street starts to get a little of the tick on inflation, we believe that will start to impact that mindset a little bit more on the inflationary readings. So members, we want to thank everyone for joining us today on the TradeXchange Week Ahead webinar. We hope everyone has a wonderful rest of the weekend. Check the news desk to get yourself ready for Monday morning, and we'll see you on the Squawk for the pre-market prep on Monday. Thank you. Enjoy. TradeXchange out.